Check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, can hear you loud and clear. Happy Friday, everyone.
Happy Friday. Happy Friday, everyone. Welcome to At the Buzz, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is your first time here, I am Coach Jay. Been a Top Step performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since May of 2023 as a performance coach. I've been involved in the futures industry and a trader for the last 4 decades. I'm here to share some of my experiences and wisdom and perhaps assist you in becoming a better trader.
Awesome. Thank you for that, Coach. Happy Friday, everyone. Again, let us know how you did in the chat. If you were up on the day, down on the day, or for the week, since uh, it is a Friday. Anything that you may have learned this week, I know for me, it's what I'm taking from this week is pay attention to patterns. Something that we've seen all week, especially in the NASDAQ and the S&P, was that consolidation that we got in the first hour. I think it was literally every day this week. But the markets eventually presented some pretty good trades if you were patient outside of that hour. So just a reminder to wait for your setups to come to you. You don't have to force anything, and you don't want to pay that opportunity cost of taking low quality setups in lieu of being patient for a trade that can really play out for you. So that's my takeaway from this week. But if you guys have anything, put it in the chat and let us know. Um, and we'll get into the news. We did have some news out today. We had a where is it? Services PMI number come out. Manufacturing PMI number come out as well. Services a little bit lower than expectations. Manufacturing a little bit above expectations. And then we had a University of Michigan sentiment number out. Lower than expectation, 71.1. Expectation was 73.2. And then existing home sales, a couple of numbers out today. Came in at 4.24 million. Forecast was 4.2, so pretty much in line with expectations. What was probably the biggest news of the day and what markets were probably waiting for was that Bank of Japan rate decision. You want to talk about that one a little bit, Coach?
Yeah, what came out as expected. I think they raised what, a quarter of a point to a half a percentage. Which I have to laugh.
Yeah.
Um, this is a big move for them. And market rallied, broke, finished back where it started. A big nothing burger. Kind of like today's action in the equities. In just about every market, it looks like a Friday market that really had no energy.
Yeah, we have been moving to the upside over the past couple of days. It felt like we needed a little bit of a pullback. Um, but let's get into the charts. There are 35 different markets we can trade with Top Step accounts, not just the equity markets. We like to focus on our top percentage movers for the day. Today, to the downside, we had soybeans down 1.01%, wheat futures down 1.85%, and soybean meal, our biggest percentage mover to the downside, at 3.58%. To the upside, we had cattle up 1.01%. The British pound, it's not one we see move in this biggest percentage mover list often, but the British pound up 1.03%, and the Nikkei, biggest percentage mover to the upside at 1.36%. Pretty big move in the Nikkei last night. I was on slow markets with Dakota. We kind of jumped on. We were talking about that Bank of Japan rate decision. Uh, After they made the decision, we did get a pretty strong sell off. We sold into uh, some support down here with this 50 moving average and just bounced off of it, right? This market's been in an uptrend and continued that today after that rate
Wow,
decision.
finished
Say it
near
again.
the highs.
Yeah, it did. And I think that might be, no, we're not at all time highs yet, but we're not far. We're about
Did you
5%
say
off.
yet?
It looks inevitable. About 5% off the all-time highs in the Nikkei, um, and looking pretty bullish. To talk about our big four, we had the S&Ps down 0.38%, the NASDAQ down 0.63%, gold up 0.43%, and crude oil pretty much flat, down 0.03%. All right. I am going to switch over to a NASDAQ chart. And let's take a look at the daily since we're at the end of the week, Coach. What are you
And the
seeing on
weekly.
the? Let's see. Let's take a look at the weekly. There we go. We'll start with the weekly first. Go ahead.
Well, it hardly looks bearish. Weekly, we talked about it's held at 3 weeks in a row. It held that 20 moving average. This week we broke over a breakout above, closing above the previous 3 weeks action, almost to the looks pretty solid. I'd say in the next couple of weeks we'll probably be blowing in the horn. So pretty solid rally this week. Held levels. Looks like it wants to go higher.
It does. Yes, it does. We closed at, I think there's, yeah, so these are the 3 weekly candles so far for 2025. This is the highest close on a weekly that we've seen. Like you said, Coach, this looks very bullish. Um, but of course, markets don't just go straight up or down, and we need a little bit of a break. We did have 5 up days in a row on the Nasdaq, um, so not too surprised at a little bit of a pullback today. Uh, we are still dealing with this FOMC candle on the Nasdaq. We
Yes,
have
we
not
are.
broken out of that. It's right below all-time highs. Uh, and let me take this off here. But we held 50% of it as a support today. We saw yesterday we closed above it for the first time in a couple of weeks. Uh, used it as a support today. We saw that sell off into that 21,850 on the Nasdaq today. We kind of bounced. I think as long as this area starts to keeps acting as a support, then we trade through the rest of this candle throughout the rest of the week, unless of course anything changes, right? News could come out, whatever it is that could bring these markets back down. But like you said, Coach, they look pretty bullish to me.
Yeah, it was. It does what it's supposed to do. Rally. I think, like you said, was up what 1, 2, 3, 4, 5 days in a row. Needed a breather. Um, and that's what we got. Did feel heavy early this morning. If we want to go into the 30-minute,
I want to mark something out real quick here. Just the
yeah,
high. Let's just mark out yesterday's range. So yesterday's range is going to be purple when we go down to the shorter time frame. All right, 30-minute chart we got here. Here is
yes. What was the low today?
that white line. Chat, what is that white line there? Does anyone know? Forget sometimes. The 200 moving average. 200 moving average, that white line down here on the 30-minute chart. We said the markets felt like they needed a breather. We got a little bit extended. We could see it here. And the last time we've hit the 200 moving average was about a week ago. So a really nice, healthy pullback here. Uh, we've seen it happen how many times now? Now, does this overextension mean that we're going to get a short? It doesn't. But once we start to see some candle closes below both of these moving averages, Coach, right, where we have
Hmm.
uh, this 30-minute candle here, which was 10:30 Central Time, that closes below both the 20 and the 50, and starts looking heavy. I don't think it's a bad. I don't think it's a extreme expectation to
Yeah,
expect a test of that moving average. Um,
especially when if we put the VWAP on from last night, we got it was as flat as it could be.
yes, it was.
Um, uh, we had that rally, and it looked good early before. the 8:30 open, and I would call that profit taking. As we said, 5 days in a row, we attempted to go through yesterday's high, um, wicked there. But to me, I got out of longer term longs actually because of that first half an hour. Um,
Got to take profits at some point.
I did not get short, and
Okay.
nor do I feel bad about not, but that's me. Now, if we look at, and I'm going to hand it off to you, Coach, the 3 minute.
3 minute opening range is right here. We'll change the color so we can actually see it. Let's make it yellow.
Whoa, feel like I
Color in the
looked at the
lines.
sun there for a second.
All right, here we go. I'll just take the other boxes off. There we go. 3 minute opening range. I'm going to attach a VWAP to that as well. Make that yellow. We tried to push above, coach, and we just never got any volume to get above it. And the reason I wanted to mark out yesterday's range that high, it's not something I look at all the time, but I know traders do. We had a really strong close yesterday. Right? If you guys remember, the house account had a long in power hour yesterday. Hoag was talking about there was a bunch of heavy negative delta that needed to unwind their positions. We saw a short squeeze into the close, but a short squeeze, if that's what's happening and shorts are liquidating positions and we don't get any new buyers, that to me, that's what we saw here, right? Where the market's pushed up on a potential short squeeze where we unwound some of that negative delta, but it didn't attract new buyers that were willing to continue pushing the market higher, right? We can see that in the VWAP where it flattened out, right? This is last night's open. That's a flat VWAP the entire time. So although price is going, there's no volume going with it. And then once we look above those highs from yesterday, the market could not attract any new buyers there. So if any shorts were still holding their position, or sorry, any longs are holding positions, like you said, coach, if I'm holding a long, it's not continuing to go up. You just closed some longer term longs today as well. I think that's this price action that we're seeing here.
Yeah, looking at that, that's why I want to go to the three. We made those highs, but we didn't take volume with it. So it was price highs, not price volume. Um, Still, there was still a chance for it to go, but once we closed it, and when I looked at the half an hour, which the 3 minute was almost the
It
same
was
as
the
the
half an
half
hour,
hour.
right?
It was like, all right. And also taking into the fact that it's Friday after a long, it just got tired out. If we think about, are institutions really going to jump in on a Friday, especially after they didn't show up on the open? Not good enough for them. Not good enough for me. Um, but I did not foresee it breaking that hard. But on a light volume rally, I think that dragged the rest with them. But
I want to give a shout out to Boomer Brian, who called this out in the Coach J chat today, where and I see some traders in the chat saying it also. This wasn't the easiest short to take, right? And Coach, you said you didn't take it either because it wasn't decisive to the short side either. You know, you could have maybe taken, and we've talked about this being a range bound trade where we get extension outside of the opening range. VWAP is still in the range, maybe a short back to it. Um, but like Coach just said, right, taking this short here, unless you're looking at a higher time frame picture, like we said, that 200 moving average was a potential target. But we're talking about a move that's you know 200 points away at that point, right? It's a legitimate target, but do we have the patience to hold a trade that long? Right? I think if I take this short, I might be thinking position management somewhere near the lows of this range, if not at 50%. Um, but this move here, uh, I think there was. like there has been every day this week. The president speaking, a bunch of stuff going on with the World Economic Forum as well. But this move here, Boomer Bryant had called out. He said it in the chat. He's like, "Does anyone feel kind of uneasy about this? What looked like a rally off the lows at the point because of the volume, right? Here's what I would call a invalidation, where price is moving up, right? So I could be in a long here and like, oh yeah, we're getting back in long, and this is going to go to new highs a day. Look at the volume. It's almost doing the inverse, right? Price is moving up, volume is going down. Um, that's an invalidation. Look at, and we're again below the volume moving average. What happens when we get back above that volume moving average? Sellers step back in again. We get drastic candles to the downside. Um, there are
And
a ton of,
volume.
and volume picks up.
Wow. That's the DNA of, to me, of just bad buying. Um, had no conviction. If that
Not at all.
buying was good, right, we should have made new highs.
Right. Right, or at least tried to hold in the opening range, maybe get back into a
Mm.
consolidation here, but no one was strong enough to hold this market really up at all, and we see what the result is. And that's not to say that you get this short, right? There is, and shout out to his Royal Trades who just called it out. Uh, this pull up also went right to 50% of the 3 minute opening range and rejected there as well. It's like they put the put the patterns right in front of your face, and they just ask you, it's like, okay, here you go. What do you want to do with this? Go ahead and execute. But it's right there, right? Put that whole puzzle together. We get a low volume rally into 50% of that range, and immediately volume steps in and sells it off. You don't have to catch this move, right? We talked about triggers the other day, and what a volume trigger looks like. But once you see something like this, where we get volume and price action out of a range, this is where I'm thinking now, if I can get short anywhere in this candle, my risk is above the highs because that's where those sellers came in, right? So even on a little bit of a pull up here, and again, I don't want to sell. I want to try my best not to sell at the lows here. But what if we just move this VWAP to where that volume came in? Now we look at the day from this candle here. More opportunities to continue to sell and consistent volume, right? We're seeing spikes of volume above the moving average, consistent. Here's another one here, right? So you don't have to try to catch the high of this move. Once the market structure changes, to me, it's about getting in a decent location where you can still limit risk if there are counter trend moves, uh, and then going from there, right? And framing out these higher volume candles. We see another one here, rejecting again at 50% of it. Uh, and why am I picking these candles? It's because they're the highest volume, right? They're these volume spikes that are giving us opportunity. Here's another one here. This one sticks out compared to everything else. What do? We reject at 50% of it. My stop can go above the highs or above VWAP, and just a really nice trend down. I caught a piece of the move today. Um, Not the entire thing. And just kind of getting back into trading. I'm not looking to catch the entire thing, but a piece of any of these moves, you could have had a really decent day today. Not a lot of opportunity to the buy side on counter trend moves. They were quick and kind of shallow, 30 points at the most. I know the house account was trying to get long, and it was just a tough day to try to buy it.
You know, it's interesting on that last one, that volume event, the one you just pointed out in the middle there, that was selling. And we haven't talked about the J trade in a long time,
We haven't.
but it couldn't do a J trade.
No,
The volume came in, they had responsive buying, and the next that couldn't take out the highs
and take out 50%.
and couldn't even take out. And then now, like you said, you put the VWAP there if that's where you're selling, or if you're buying because you think that's going to stop. Well, okay. First of all, if it's a good buy, it should break the high of that high volume. Think about that. Just think of the physics of that, and it doesn't. So one of in using that, those J trades we haven't talked about them. I haven't seen much of them lately.
I think that's
Um,
why we haven't talked
maybe
about them.
yeah, maybe because I'm not looking for. We see what we want. But it was interesting that that volume right there, that and it never got above that high. That was almost like the knockout punch. It was like,
Right.
you know, it staggered and never recovered.
We got a question from Starseed Trade. What is the J trade? So, like Coach Paul said, we haven't seen it in a little while, and maybe it's because we're not looking for it. I'm sure they happen, but it's basically a volume exhaustion, and then a 3 bar or a reversal over that. So you're gonna see high volume. Uh, just do that. You would
Yeah, late
see
in the day doesn't count. Yeah.
right. You would see high volume, and then let's say it's this candle here, a high volume. We hold the low of this candle and then close above it, right? And we're looking at not just a 3 bar reversal because or a 5 bar reversal or whatever you want to look at it. It is a a lot of times it ends up being a 3 bar reversal, but we're just adding the volume component to it because uh, that volume exhaustion a lot of times precedes a reversal in the market, right? So um, in order for this to work, I'm going to frame out the volume first and I could get long down here, right? If I think that's the exhaustion, but in order for me to confirm that long and continue to hold it, the candle we need to get a close above the high of this candle, and in this case, we never got it. Um, 3 rejections here. To me, this is a great short signal, right? Stop right above the highs here, risking about 20 points. Um, you know, conservative target could be the low of the candle because we know a ton of volume came in there, and in order for us to continue, we need sellers to come through. We need some follow through. But the J trade would be exhaustion volume, candle close above it, and then we get a reversal. Um, but today
Yeah,
we were
that
just selling.
and you know, we just and also looking at a J trade, that one was just to get an idea. Before that, if we don't coming into that, let's go to the last highest selling volume and eliminate the screen. Move it to the right, all the way to the right, and keep going. So we don't know what's coming. Here, there's a volume event of selling. All right. And we frame out that high volume movement. It's
This one, coach, or the one I have framed out here.
it, uh the, first one, the one that left.
This one here.
No,
Here we go. Here we go. Right here.
yeah,
I got you.
yeah, that one. Now put a VWAP on it and go start going one by one.
Urgency in this VWAP too.
Yep. And you know it's a good comment. It's so obvious in hindsight. Wish you could be seen in real time so easily. Exactly. That's why we bring it up. It has to be repeatable. Um, if you're looking for that trade, not everyone's going to work. And if someone tells you, run, run fast, don't ever talk to them again because there is no perfect trade. But reading that, you understand what I'm willing to take. If I want to buy it, I need a certain thing to happen. I need it to break a high. So the next candle from where we anchored that, we have another high volume, the run to the right. And again, what does that tell us? And I'm without even a trade, let's read. You know, beat the I in basketball would teach read and react. Just read this. If I'm if I'm looking to buy it, all the selling comes in and it holds. It's not breaking those highs, and it's every time more volume, higher volume comes in, it's selling. So if we're reading it, at least eliminate. I'm not buying this. I'm you know I'm swimming upstream. Um, but just in trading, just reading that, and you do this enough, you can get the basic understanding of flow. And when you do that, you're going to have a higher probability versus going, this is cheap. And I went through years of that. It's cheap. It just can't
Cheap
keep
costs you.
going down. Yeah, now it's cheaper.
Yeah,
It's cheaper. Now what? Well, it was cheap then. Well, I can't get out yet because it's a loser. And I'm not saying these are mindsets that can really get you in trouble.
I agree.
Um, so when we review things, I just hope people don't get this feeling or this understanding that, oh, this is just easy. It's not. But
Definitely not.
when we review, we can find things just like reviewing your trading, like that are repeatable or that you can read versus projection. This is going to go up today, or this is going to go down today. Remaining in the present and executing a trading plan. For me, I didn't want to buy any of this because I got out of a long, but I if I was but that was my setup. If you were looking to sell it, you man, you did well.
But
If
no
you
no
went to
position
sell it
is a
and you
trade. No position is a trade though, right, coach? If you're gonna look at the market and you wanna be long the market, knowing when not to buy it is almost as important as knowing when to trade it, if not more, right? Because you could be trying to convince yourself of something that's not there. Um, but in being a trader and you're saying, "Hey, I wanna buy these markets," this is not a good price, right? Where you're still in the market, and you're still shopping, but if I'm going to buy it, it can't be against the a heavy negative downside flow, unless I'm gonna be the market participant that turns the market around, and if I was that, unfortunately, chat, we would not be talking. So, gotta get in line. Gotta get in line,
get well, that actually putting all those VWAPs.
right? It's just like
Okay,
a waterfall.
someone said it's easy. Let's just go to the first one we have marked and go forward from there. Remove the screen. Yeah,
Oh,
the first one we
can
had
we do
marked.
something actually? Because I think the
Yeah,
do you mind if
sure.
we switch over to the S&Ps and
All right.
we look at that? Because we know what the NASDAQ looked like, and I think the S&Ps were a little bit different. Let's just find a high volume candle, and do the same thing. It's going to look the same, obviously,
Yep.
but and I really like what you said about being repeatable. If anyone has joined us for, a month now, you hear us talk about the same things literally all the time. And the reason is, like Coach said, we want to be able to read and react to these things in real time when they happen. And the only way to do that is to repeat the patterns. Coach, I don't know if you heard about Jaden Daniels, his training um, that he did, the quarterback for the Commanders. But they said
I want to teach him to trade.
his one of his stipulations for getting drafted to an NFL team was they had to have a VR virtual reality training, and he plays it. He goes in that simulator at 2x speed. So basically, he's playing the game faster than he would have to in real time. Um, Here we're kind of slowing it down, but you need to know what to read in order to be able to do that. Um, and that's exactly what we're doing here, right? And uh, these are strategies that myself, that Coach Paul trade with. We had Coach Robert on yesterday. He went through his process, and I think the one thing you said, repeatable. We hear traders say, "Hey, I made X amount of dollars, but then I can't do it again." I think the question that we should all ask ourselves is, okay, great. Let's say you made 10 grand today. Whatever process made you that money, could you repeat it again tomorrow? Or was it a fluke? Because if it was a fluke, then I'm worried. Because it's just like, oh shit, I made that money. I can't do it. I won the lotto. I might go and play for the next 50 years and never win again, right? Where there's nothing repeatable there. But if you could do the same thing over and over, start to find what presents high probability yields to you, then you should have a lot more confidence in what you're doing because you know where it came from. If you have no idea, then then it's a scary game to play. But if you can do exactly what we're doing here, you're on your way. But here we go, coach. High volume candle here. We got a VWAP attached to it. Um,
And let's look what happened when his volume compared to the opening. So, okay, now there we go. And I got, I thought actually when that happened, I thought the S&Ps were going to rock higher,
like it.
but it never left it. So we know that we come back, and this was the funny part is we come back. Look at the level it came back to, the open, right? And once it was like there was a seller that was waiting, and there it is. Because why? It's the highest volume right there. That's
Oh yeah.
that's really important. Um, did we leave? Yeah, there's a big volume.
What do we
Now
do with the opening
that one,
range? Never leaves the high.
the price did. Now,
See.
if I sold that too, I personally, once it got over VWAP, I'm out.
Yep.
See, those are not. I'm limiting. We talk about limiting risk, and this goes back to me with it being in the pit, where the other side, the local, not, could lose 50% of the time and make really good living. Like here, we sold it. It's a scratch or a small loss. Okay, I was wrong. But I'm moving with the flow of the market. Now, price rallies. Go ahead, coach.
This rally here again on lower volume, right? Volume decreasing, price going up. There's a divergence there. What happens when we get back above that average? We'll frame out this one again, right? Completely different story if this volume was increasing on the way up, because then it would have dragged that VWAP line up as well, but it stayed flat, right? So again, price moving, the market not necessarily convincingly buying it, right? Maybe just some shorts getting out. Because like coach just said, right? If you were short here, it got back above VWAP, you might have bought it, right? Market participants get out of trades that aren't going in their favor. And sometimes that's going to affect price action, right? If I was short, I could have held this short for an hour. And we're talking about shorter time frame traders here, right? We're all day trading. If I hold this trade for an hour and I don't get any favorable price action, is it is it unfathomable that I cover this short? No, right? And that's what we get here. But in this move, um, the buying wasn't convincing either, right? They weren't buying it to trade higher. Okay, so we got this high volume candle here.
We got the reaction, and it was heavy volume that did what? Showed the
Now we're
market
moving the
lower and
market.
held.
Right.
What time was that?
This was 10:54 Central.
So later in the day on a Friday.
Outside of the
I'm
hour
not
chop that we've had every day this week, and we're seeing volume coming in.
okay. Let's mark that with see if next time we get a higher selling volume. Oh, there it is. And attach a VWAP to that.
We never close above 50%. Again, a bunch of rejections. Stop could go above the high, or you could go two ATRs like Coach Paul says, and now your stop is up here. But again, these are all in flow of the market. And this happens a couple times. We're going to switch markets. We're going to look at gold as well, and any other markets you want to look at, Coach. But to me, it's the same story here. We got some questions in the chat about level two data. I use it every single day. And we said this before. I don't know that it's necessary. Coach Paul, you don't use it at all, right?
No,
Right.
I
So
don't look at DOM. So it's just I want to see the output of the DOM. Just for me, I get especially with NASDAQ, I get like transfixed of the movement. It doesn't help. It creates anxiety for me. I just want to see the output, but I'm not putting. I mean, it just doesn't work for me. But if it works for you, here, I wouldn't reject it without looking at it. Period.
Do use it. It's not a necessity. You might hear otherwise from other people, but that might fit their trading style better, right? If you're a trader who's trading the 10-year notes and you're looking for 3 ticks, then you might use it, right? Because you might be scalping in between. But it really depends on your trading style. Um, but if you're interested, pay for it for a month. This is what I'd say. If you're interested and you think it could help, pay for it for a month. And if it doesn't help your trading, cancel the subscription and just don't even use it anymore.
And remember to cancel the subscription, not like your
Yes.
gym membership that was, oh, what the heck? Yeah, when I had one once with 3 years, which is it's clicking all that, and I forgot all about it. Should have got into that business, but there we go. Wow,
Really nice selling throughout
all the
the
way
rest of
to
the
the
day.
close.
Yeah, to the close. The S&P is a little bit stronger than the NASDAQ, not testing that 200 moving average that we saw on the 30-minute. But we might have, uh, let's see. Let's see what next week brings. We had the same thing here, 5 days up in a row, a little bit of a pullback. Again, a little bit stronger than the NASDAQ. The SPX did make new all-time highs. Um, the futures didn't yet. We are a little less than 1% off the all-time high. So S&P is looking a little bit stronger. The Dow, I believe, looking stronger as well. Where if we look at that December 18th candle, the Nasdaq is the one that has not traded outside of it. Everything else has. Maybe not the Russell, but the Russell is
You
in
said
a
the
consolidation.
SPX made an all-time high and the futures didn't?
Yeah, SPX made an all-time high. Futures didn't.
That kinda hurt me. I don't how did that happen? I don't
I
wanna
don't know.
know.
I don't know. All right, let's move on to gold. Again, shout out to Hoag for this call. We talked about it a little bit yesterday. Hoag has been tracking the delta in these markets. He's been doing it for years. I didn't realize that. He shared a spreadsheet that he had going back to 2022 of the volume and open interest and delta for like 4 different markets, and he tracks it every single day. And he found a pattern that he saw in 2022 that led to a 200-point move in gold, and it was negative delta uh, consecutively while the market was going up, increasingly negative delta. What does that mean? Negative delta, market order sellers, so sellers coming into the market, prices going against them. What do we keep saying about bad selling? Uh, bad sellers become buyers eventually, and we might be seeing a short squeeze in gold right now. 2% off the all-time high in the futures contracts, and just continuing the rally. Let's look at last night's open.
Alright. That was last night's open. Alright. We have someone here who's gold wrecked, killed me last night, kept calling tops. Maybe this will help you, and I'm gonna pass it off to Coach Jay.
Okay, so who was that? Who said that? Uh, oh,
Mo. Mo.
okay, Mo. So you're calling tops in gold, right? Mo, if you can, for a little bit, if you can just put brief description of why you want to short gold, because I wanted to short gold a couple of days ago actually, but then I had to realize that I was counter trend, counter the trend, counter the higher time frame trend, where if we look at on a daily, the market's moving to the upside, and I think it's okay to take counter trend trades. And there was actually a really good short in gold today that Coach Vince caught. But if we look at it, and you said you were last night you were trading it, um, maybe you don't look at the markets this way, but if you join our class, you know exactly what we're looking at. First 30-minute opening range, right? Globex starts, we attach a VWAP to that. This is almost buy with every dollar you have kind of setup, right? These are the setups that I want to lean into heavy, right? Because the market is showing me that at least in this hour and a half that we're trying to move to the upside. Um,
Wow,
and it's been doing that over the last couple of days. And then I had the information from Hogue as well that we're seeing a short squeeze. Um, and
and
look at just
it
go
starts
ahead, coach.
early.
It started very early, as soon as the
A
market's open.
short squeeze has to start early because it's urgency.
Yep.
th- go ahead. Uh,
So yeah, I mean, this VWAP line, right? Look at how urgent this is, right? And this is not just price going with it, right? Volume is going. It's urgent, and then try to put the whole picture together, right? Hoag, and you may not have heard Hoag talk about it, but this is the way I'm going to look at it. We're seeing a short squeeze happen on a higher time frame. We have Bank of Japan news coming out, and the market is just getting squeezed, right? So if I'm short before a huge rate decision and the market is already squeezing me out, am I going to want to hold it into that big rate decision or not, right? And we're seeing buying before that rate decision even came out, right? Off the open, this VWAP line is moving to the upside, and there's any shorts that I would see here are when we get too far extended from that VWAP, right? And you may see something different, and I want to encourage you to trade your trade plan. Whatever you saw was how you view the markets.
Coach,
But
right
go ahead, go ahead.
there, I just had
Mhm.
that. We have the highest selling volume of the night right there.
Right
When
here.
we just
Yep.
talked about, let's frame that out and add another VWAP. Now it should stay if it's a good sell. If it's a sell, a short difference between a sell and a short. A sell, that selling is most likely profit taking. If it's a good sell, we should see VWAP hold, and it does for what, a little bit there.
Leaves
But
that
once
range.
again, it never left the range. It goes in, and we got above it, and there's no higher selling volume, and it keeps going. And the original flow was buying. So now there's another term for that. I'm not going to use it. Don't, don't don't spit it in the wind. There's other ones. Um, and that's kind of what's going on here. If and I, God, when you said that, I felt that. I've done that. It
Eh,
can't. Here, right here. Boom. You can, like I say, maybe you don't have and you want to fade it, but here you have to have some. It has to be quick. Think about that. If you're selling it, you need to get moving right away. If not, what's going on?
So we got a comment from Mo, and then Aaron trades. Shout out to you. I uh, see it in the chat. It's such a normal mistake to make when markets are so bullish. We have this desire to try to call the top, but as we progress, we realize our job is never fighting the markets; it's to be in the flow, and that's exactly what we're talking about here. But Mo said, right, my thesis wasn't a technical one. I felt the move up was too high, too quick, and felt a pullback was due. This was during the time you were on slow markets with Dakota. So Mo, the what you just said there is almost leaning towards an emotional decision, right? Where it's, oh, these markets can't go up this fast. They need to go down. It's okay to think that. I think it all the time. But like we said before, right? Let's say you were to take a short and it worked out. Is there something repeatable in that process that you could do again tomorrow where you could benefit from again? Right? Because you said there was nothing technical about it. There has to be some type of signal that says, okay, I'm thinking short and the market validated the short. And if I wanted to do that same trade tomorrow, it was based on X, Y, and Z. So I know I can go back to it and repeat it. And you said nope, and it's fine, right? And we're not because someone could have taken this short if there was a setup. And there's a decent one, right? We talked about it, coach. I think this might actually be a J trade if we look on a shorter time frame to the upside, um, where we have high volume, high buying volume. Yeah, this is exactly it. It's a reversal, right? So we have high buying volume at the highs. The market can't continue to push higher. I'm on a 3-minute chart at this point. We get a close below it. This is a good short right here. Now, still got to keep the higher time frame picture in mind. The market is moving to the upside. So if I'm swimming against the stream, Is my job to swim as much as I can until it starts pushing me out again, or am I just gonna fight the stream, right? If you're in a river and the river's flowing against you and you're swimming and you can find safety, do you just keep swimming against it? Eventually, you're gonna get tired, right? And this is what you're doing here. You can catch this short on a shorter time frame. This is a nice trade. It's a 5 point trade, maybe even a little bit. But you can get about 6 points out of this. But keeping the higher time frame picture in mind, the market was going the other way, right? So identify when your trades are counter trend. If you have that contrarian mindset, about 70% of my trades are shorts. I don't know why. It's just a lot easier for me to click the sell button. But when I get in trouble is when I
Closer
don't realize when it's like I'm right-handed, it's on the right. Maybe I need to move the sell button to the but
to the left.
yeah, but you knowing what best trading is when whatever your trade idea is aligns with the market. When it doesn't align with the market, you could still make money, but you have to admit when you're against the market and then take what it's willing to present to you counter trend. Um, if it messed you up, what I will say is it's going to happen, right? It's going to happen to all of us where we are going to find out that our thesis does not align with the markets. Don't let social media fool you. And anyone who's talking about, oh, they win trades all the time is bullshit. Don't listen to that. Um, it's not about getting every trade right. It's about how you respond when the market doesn't agree with your trade ideas. If it blew you up, if the trade blew you up, what I will say is, like Coach Paul says all the time, regardless of what happens, don't lose more than 12% of your account. You could have the market dead wrong, right? Gold could have rallied and made new all-time highs, been up 10% today. If you thought it was going to be a short, that's fine. You were wrong about the market. Don't sacrifice your account because your trade idea was wrong today.
Yeah, it's here. It goes like is one of the I think for people who just start trading, it's I have to be right, and at least that's the way I felt. I've said it before. I was trained. I mean, I was an econ major. All I have to do is figure out all the fundamentals, and markets gotta go that way. I found out the hard way. It's so that I'm just trying to be right, and then you get to a point where it's not. I'm not wrong, although I'm losing money. It's the market's wrong, and it'll catch up. None of that as a trader. None of that is going to work over a longer period of time. So just you don't have to be right. You have to trade right on the hierarchy of trading principles is manage your money. There used to be a big poster, and it was very popular. It was just about in every trading office that the CME put out in the 80s. It says, risk not thy whole wad. Um, so, there's a point where, okay, done. I'm not seeing it. Hey, what's on TV? Or maybe better yet, go to that gym that you've been paying for but not going. Do something, right? At least that for me. So wow, look, did it collapse at the
We
end of the
Yeah, we did have a nice reversal eventually at these highs, right? Where again we got a little bit extended, a nice pullback, kind of right below that 2,800 level, where there was an opportunity for a short. I think the house account actually tried to get long on a pullback, but eventually we got back under VWAP. It started to hold, and a decent short here. Kevin, yes, markets are closed. This is live. We're just doing a little trade review here. Um, Mo, nice recovery. Uh, Said it was down 1,300, was able to get back to positive 400 during the New York session. Nice recovery. Hopefully that 1,300 was within your uh, daily allotment of risk, right? Where again, repeatable risk management, repeatable process is what we all need. Um, what other markets we want to talk about, Coach?
Oh,
Got a
I'm
couple.
going to shout out.
Go ahead.
Let's look at the cattle.
Of
By
course.
the way, might not be able to afford meat soon. Let's start with the daily. I'm going to give a shout out to Coach Hoop. He's been on this. He's the cattle. He's the meats guy. um, steak is very expensive right now. These are all-time highs. Um, and that is a trend. If we look at the half hour for today, we're above the 200, above the 20. Yesterday it just kept on good. Same thing yesterday. So there's a trend. There's a slice of trend there. Um, but let's go down because one thing I like about the meats, there's no overnight trade. There's no there's no imbalance to be made up from overnight. So let's look at a 3 minute from the opening.
I need to start trading this because I buy steaks once a week. I I use them for lunch, and I need to hedge my steak purchases because this
Yes. I want to put it on Robinhood. Okay, there's a coin, steak coin. So you can
like
hedge your steak consumption.
this is crazy.
Yeah, look at that. There it is again, urgency. So it's cattle. We could, people give a shit. Oh, who gives a shit about cattle? Oh, well,
Money's green.
money's green. And here's one of the things that if you're from the equity world or the crypto world or any other in the cattle industry or commodities, you can't just make this shit up. You have to raise cattle. The it takes the demand is not it. These high prices haven't cut off demand. Um, and listen to Coach Hoop when he does the fundamentals. But I've been in commodities for most of my life. And for any of you out there who are farmers, hats off, or ranchers, this isn't like you can go and, okay, create some cattle. It's a 5-year process to get to meet
Just make
that
some more
demand.
cows.
You're just not going to happen. Um, and there's not enough cattle for the demand. So we go back to economic principles. How do you cut off that demand? One of the great quotes of commodity trading is the best cure for high prices in commodities are higher prices. Because soon enough, it keeps doing this. That that pork chop looks better, chicken looks better. Maybe I should go on a diet and I'll just eat salad, whatever it is. It hasn't happened. So in a flow, it's trapped, and we just thought this is trapped money. This is like you if you were a meat buyer for a grocer and you make your call to the feedlots or to the butchers, you have to buy it, and they're like, "Oh, you want more?" Um, yeah, like, can we do what we did last week? Oh, hell no. That
Prices
is the
went up.
flow.
Yesterday's price is not today's price. Clearly, this is just rallying up. And, Coach Hoop does the fundamentals class. And I think what we're kind of saying here, Coach, is this might be a fundamental move. Does this rally continue? Do the commodities are the commodities built like the equities where they're just meant to go up? They're not, right? And like you're saying, at some point there's going to be a lack of demand that brings these prices down. But for right now, there's something that's driving these prices up. Um, and why not take advantage of it? Trading a technical pattern when it sets up, right? We look at the same pattern every day. I saw someone just mention we got a perfect, retest of VWAP. If you didn't catch this one, you catch this one. It's still a decent move here.
Yeah.
What's the tick value
That's a
for
six
cattle? You
hundred
remember,
dollar.
Coach?
It's 42, 425 a tick. Um, I just have it. It was almost a $700 move right there. And that's a 3 minute chart.
one direction. Not a lot of guessing about where this market. So if this was a Nasdaq chart, right? We might. These are the type of days on the Nasdaq where we see a chart like this, where we hear Topstep TV. We had trader make $100,000 today trading this price action. Now, are you going to make $100,000 trading cattle? If you trade that kind of size, but look at how clean. His Royal just said it. Look at how clean the chart is, right? I don't care what this is. If this was the Mexican peso, I want to try to find this trade because this is a repeatable pattern. We could take notice we haven't quoted a price. I just looked over at it now. If we didn't look, I don't know what cattle is trading, but the chart is moving up, right? And
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 the buying is
and the buying is serious, right? There's no hesitation in it. It's just a clean setup. Uh, yeah, might be trading cattle
yeah.
next week.
Take a look at the daily again. So, and this is one of the things about fading. I have no desire to fade this.
Oh,
Why? I don't, it's rocket. If take a look at cocoa.
can't pull
What
it
do
up
you know?
here. Might have the
CC.
data on Quant Tower. Let me open up Quant Tower. I might
Oh,
have the data there.
okay. All right. Because that's a runaway market that started 2 years ago, where price never saw this price and it just kept on going. There, there was disaster 2 years in a row in cocoa. We watched that. What was the year last year?
Last year, yeah.
Um, but the bottom line is this: markets that trend have an imbalance that need to be worked out. This imbalance is demand imbalance is bigger than supply, whether it's cattle, yen, rice,
Milk futures.
NASDAQ, trying to identify where that is and get on it. And then if you're wrong, try it again. If you have good risk management, you're going to catch one of them. It's like catching fish at the right time in the right structure. If you ever go fishing, you need structure. You don't go fishing in the middle of the day. I mean, there's a process to catching certain fish. Well, the hunter warrior. You just don't. It's funny. If you ever gone hunting, it's like you have if you've never gone hunting, you have this preconceived idea that these cruel bastards are out there killing Bambi. Go out there. It's cold. See if you find yourself a deer.
You're hunting for food, right? Not just for game.
For hunting for food, not for game. Exactly. It's you have to follow a pattern. They just don't jump into your pickup truck all cleaned up and ready to eat. There's a process. Um, and poor hunters are vegetarians. Because that's it. No, there's nothing. I was a vegetarian for a year. Actually, I'm nothing. I'm not here making any judgments on anyone. But the fact is, trading, hunting, fishing, there is a lot of principles that are similar.
100%. We talked about that before, right? And in the book, what was the book, Coach? You recommended. I read it in like a
The
week.
way of the hunter warrior.
The Way of the Hunter Warrior, right? You hunt, you you eat, and then you wait for the next opportunity, right? You don't just keep looking to eat more.
Yeah. By the
Get
way,
your money, get
when
out.
we were hunting society, there wasn't many fat people. I mean, obesity was not a problem.
Right.
Um, so anyway, I'd like to be an obese, successful trader.
Well, yeah.
Yeah,
Fat
I'd
pockets
wear
I'm
that
okay with.
proud. Yeah,
Right.
yeah, fat pockets work. But Maybe we're getting a little too off track, but here's the principle, and I think that this helps the mindset. You're there hunting, not flailing around trying to, you know, capture some food. You have to have a plan. You have to hunt at the right time or fish in the right at certain times of the day. I go back to I was in Arkansas. When I was younger in my 20s, and basically it was a drinking trip. We hired a guide, spent hundreds of dollars on all these fancy lures, and he took us out there. He watched us for a couple hours, and he just goes, "Boys, put away the hardware. Go get yourself a can of sweet corn and some marshmallows."
Anything.
And he took us. He goes, "And come back in the evening. Come back about 4 o'clock. We'll go." Bang. Two things. We caught fish. Um, Simplicity is a big thing, but also knowing the territory, knowing the time. What is that? That's a process. Without a process, it's just randomness.
Something repeatable. Know when the fish are gonna bite instead of just sitting out there waiting for them to bite. There are good times and there are bad times, and we need to know when they are. We are at time, but this has been a great
Wow.
conversation. I want to thank everyone for hanging out. Let's see if we got any questions that we didn't get to in the chat. We'll kind of do a speed round of these questions. Do you prefer the fast market session or later in the day trading? From Schlerix. This week, I've preferred the later in the day trades. I, of course, look at the markets when they open up, because if they're going to present an opportunity, I want to be there, right? Speaking of fishing, I know that sometimes I can catch some fish right at 9:30 Eastern time when the markets move around. But if they're not swimming, then I'm okay waiting, right? And it's to me, it's been really important to notice when they're not there, right? When there's not an opportunity there, try to identify that as quickly as possible, because I think where I've been getting into trouble recently is trying to force a trade, right? Instead of letting it present itself. So personally, I like when the market presents opportunities earlier in the day, just because I can get off the charts earlier. But I'm okay being patient. I give myself from 9:30 Eastern to 12 p.m. That's the first trading window for me. So anything that happens inside of that, and then I'll take a break, usually for about an hour, and then come back. What about you, Coach? Do you prefer fast market sessions or later in the day?
I'm different. I prefer fast market sessions earlier in the day. For day trading, I I want to try and like that 3 minute. Is there some kind of imbalance that I can get on? And if it's not there, and I can lose, I've become good at limiting my losses. I want to be wrong early, not late. Um, so yeah, I'm an early guy, but I'm gonna leave this for the weekend. The early bird gets the worm, and then have a great weekend.
Have a great weekend, everyone. If we didn't get to your questions, bring them back. A couple of questions about VWAP and things like that. It's in the drawing tools. Anchored VWAP is in this drawing tool over here on the left side. Um, Actually, I have some notes that I do need to get through. I've been kind of skipping over these, but we got some important ones because we have some pretty cool guests coming to Topstep TV next week. So let me just get through these really quick, and we will get out for the weekend. Actually, where is it now? I don't see it. But we have Dr. Brett Steenbarger and Jim Dalton joining Top Step TV next week. Steenbarger is going to be on Tuesday, and then Jim Dalton, who wrote the book on market profile, is going to be on Thursday with Hoag. If you watch how Hoag reviews the markets, looking at market profile, that's who he learned it all from. He's going to be on with Hoag, so I think that's going to be a great segment. Thank you all for joining us this week. Thank you, Andrew, as always, for sending the questions over. Hit that like button if you haven't done so already. And Coach Paul, thank you as always for another great week.
Thank you, Coach Jay. Have a great weekend.
Have a great weekend, everyone. Coach Hoop is doing a class in Discord in about 10 minutes. So go ahead and check him out over there. We will see you all next week. Bye.
Um, no, I can't. Oh, there it is. Yeah. Yeah. Nice. Well, that comes in with the natural trying to catch fade markets. Um, and I just it's never worked for me. Because that's think about it. It's just price. Your analysis only comes from price. The volume or moving average. It's just a price, and you can get. That's where you can lose control, or you can get dumb lucky. Um, but yeah, that fading like that, that's not always. Yeah, it's a very good point. All right. Yeah. Um, and nothing. I'm not putting it. I just can't do that. It doesn't seem to be working very well. Um, or it's to me, it's just like I said. I gave it's going against the flow. You're gonna wear out. And yeah, they didn't last very long. Yeah, well, that's you know what? That just like here, that's a great question. The glare of my head is bothering me. Um, the 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 guys who survived the longest. Can you hear me? Oh, maybe. Hold on. Can you hear me now? All right. The guys who survived the longest. Can you hear it? All right. The guys who survived the longest or the biggest were the ones closest to the volume. They got fed or they got an edge. I mean they just it was a process that they did. You have to give me the edge. I'll take it from there. Now, there were the other guys who weren't on the volume, and this goes back to being when I was at the mid am when I started. That was where there was a lot less paper. It was the original mini contracts, right? Was the mini exchange. Those trade since you couldn't rely on paper most of the time because it was a lot less paper, right? You had to learn how to trade. You had to learn how to take risk, or like you said, you were asking where the guys who would just get stubborn. Those stubborn guys might get lucky, but they didn't last long. Now, the guys at the mid am who learned, I mean, like Richard Dennis. I mean, I could go on. There was a whole bunch of them. They had a process that they executed because they weren't on the paper. So if they could make enough money there to get to the board of trade or the mark, they were dangerous there. People fucking hated them because they had a process, and now they could pick their volume. And the heck, they might not even. There was a lot of guys who were members that would just wait for their levels. Meantime, they might be having a coffee up in the members lounge, looking onto the trader floor, doing doing charts by hand. Um, and they would pick their spots. But there were those people that were like, they would randomly, trade or fade. And you could the thing was, you could get away with that 80% of the time, then you get rolled over. And you can't get out or you get stubborn, which isn't, what is the top of the hierarchy? Risk management. It's not sexy, right? You don't hear the Twitter sphere proclaiming. I mean, they show hot women and fast cars, right? Show, the tortoise in the hair. Steady and slow wins the race. That's why I really like. Actually, since I've just been focusing on trading small and executing a plan, and for the last month, it's just been much more comfortable where I was. I don't Like I said, I don't want to be a 10 lot trader in one market. Like I saw that. And I'll use in the cattle the 1 minute bar. Any of those that don't trade overnight, the 1 minute bar has a little more importance because there's it goes back to the old days. All the orders have to come in to get filled. There's none of this bullshit overnight. There's no, it's now. Um, so even at night, the 1 minute bar, then the 3 minute bar, and then the 5 minute bar. What will happen is if you have a big move overnight, the the 1 minute bar you break, you risk 2 to 1. 3 minute bar, if it breaks and you get urgency, add another one with your stop. 5 minute, do it again. Half hour, do it again. If you do 2 to 1, all of a sudden you get paid $500, and by the time you get to the half hour, you risk that $500, and now you might get a runner. If not, you scratch or you lose a little or you make a little. Yeah, look at that. Fucking, I mean, you said that's urgency. Did you change the color? Yes. Oh, you talking? I can't hear you. Hello? Hello? It's muffled. It's like you covered something. Oh, there was a noise. Oh, yeah, I can hear you now. Oh. When you moved there, there was like a noise, but it just fell out. Hello.